The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 2nd, fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one and an extraordinary weekend as well. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us today. Let's go take a look at the circumstances of the bulls and the bears, the buyers and the sellers. I'm absolutely grateful for your presence. I'm here to serve you, so feel free to pick up that phone. Dial on at 877-927-6648. Of course, internationally, you can call us at 727-445-1044. This is Fabulous and Fantastic Friday. Of course, it's Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 66 points. She's trading at 16,337. S&P up 8 at 1932. NASDAQ Composite up 30 points at 46.57. Russell's flat. It's up a buck, 10.98. The DAX closed up 43 points. The FTSE closed up 57. Gold, that's trading up 22 bucks right into resistance. Silver's up 70 cents at 15.21. Not a lot of movement in light sweet crude. It's up 67 cents or so right now at 45 and about 30 cents. To the upside in the markets, you've got Insight. That's up about 11 bucks. Google's up 11 bucks. Wynn Resort's up $10. Man, we should take a look at that. Rare. That's how I like my steaks. Rare. That's how I like my fish. Do not cook it, please, or do not serve it to me. If we, that's up about $8. Baidu up $8. To the downside, we've got Amicus. Amicus Therapeutics down $6. Chipotle off $6. I'm just looking for something other than an ETF out here to the downside. Signature Bank of New York, that's down about $4. But hey, where do we begin? You gotta love these markets. It's another 370-point day from top to bottom. And if we take a look at the Dow futures, heck, it could get to be even larger than that. Now, we saw quite a movement in the markets. You know, each day when I'm trading, so, you know, there's nothing is basically on. Every now and then I poke my head into the den. Most of the times the sound is even off out there. And I'm just taking a look at really 4 screens that are in front of me. And I'm always trying to get a sense of the patterns that are working, that are providing us with signals in the markets. What I mean by that is different time frames. When I take a look at the S&P futures, the NQ futures, it's really just those two where I am paying strict attention to it to look for some type of signal. Now, what was interesting this morning is when I was taking the signal, actually, the best signal with regard to the market selling off after the jobs report was this chart here, was the actual 10-minute chart inside of the ES Mini. Now, what I have on here, I just have the tools that I have on here, the tools that you and I take a look at each and every day. The one ultimate pattern that you have to learn how to master. You've got to learn how to master this, especially when you're really trying to measure the emotion of the market. Forget about your own emotion. I mean, I can teach you how to measure that too. But what you're really trying to do when you're trading and investing is get rid of that emotion and trade the emotion of the marketplace. Now, the absolute best tool that I've been able to identify has been when price moves higher with less relative strength and when it moves lower with less relative energy out there. What your role is each day is to try to find out where, you know, what is the rhythm That's it. What's the rhythm, the heartbeat of the market out here, and which time frame? Because it usually will last for the entire day. Sometimes it lasts beyond that. But if we take a look at as the high was being made out here, we don't have to worry about any kind of seventh wave moves or anything along those lines. We can see that as the high was made out here at 8:30, we saw that price was moving up with less relative weakness out there. Then obviously you've got that huge wide-ranging bar. You had to be really quick at the fingers. You had to really have a sell stop order in place if you were going to go ahead and try to trade that, because the market could have gone in either direction out here. In this case, we saw the market move lower. And then at about 10:10, as everybody was wondering, hey, is this market going to crater or what? What the 10-minute chart was showing you and I, just as it was at the top before the release of the jobs number, it was showing us that the move lower had absolutely run out of steam and energy. Usually I don't really show, not for any reason, I don't usually show the bottom of the chart panel. I just kind of hide it out here because you folks know that, these lines that I've got on the top portion of my chart, they reference what they're supposed to. They're automatically generated for me. That way I don't have to be sitting here paying attention. And you can see that the market was pushing lower, and it was doing it with less energy out there. And then what you and I do, because there's only one role for buyers and sellers when they report to work, only one role, and that is to paint you and I a sign. And we got that sign actually at the worst, where the price had been driven the lowest. But yet that relative strength indicator was rising, and we had a nice little bullish engulfing candle. The very next session out here, on a 10-minute basis, really took it back. So it said, okay, are you going to come down and make a lower low? What are you going to do? The very next candle, another bullish reversal signal, bull sash, bullish engulfing candle out there. And then price finally got above and stayed above. It's a 10-minute TAS market profile low out there. Now, you and I, we've been taking a look at this and what seems like all week, all month, all year, right? We take a look at where's that point of control in reference to, I'll turn that off in a minute. Where's that in relationship to its support line or its resistance line? And here, this case here, 1889, the support line, point of control at 1894. So price was closer to that. It was actually a bullish setup and said price ought to at least move up to 1902.70. Well, obviously, it's done that and then some. We've got an A to B equals CD to the upside. We don't, on the upside here, price is now on a 10-minute basis. It has now gotten into or above its relative strength indicator above that 70 level. Now, at 70, sometimes people will take a look at it as being overbought and oversold out there. I really like to take a look at it as, hey, I want to see some divergence form out here. Now, whether or not we're going to get that between now and 2 p.m. or not, I don't know. And if we don't get it, price, so price has made it all the way back up from the futures contract perspective as to just about where it was trading before the jobs number was released out there. We'll see if one of these patterns sets up. It may anything is to me, as far as most likely what you're focused on, it's really the same thing. What is it going to look like at the end of the day? And I don't know that. What I do know is that this 10-minute chart has been really good for the day at defining both a top and a bottom. That means it should continue to work. So we'll keep our eyes on that. Let's go take a look at the markets, and let's get out of the 10-minute chart patterns out here, and let's go take a look what's going on the larger time frame patterns, because there's a lot to really look at. But let's start off by taking a look at the summation index. And here's our panel. You know this panel. You love this panel. You're growing to love this panel. Left-hand side, New York Stock Exchange. Just to the right of that, NASDAQ Composite. Further over the right is the Dow. And then I've got the S&P 500 on the very right-hand side. Now, on the left-hand side, the New York Stock Exchange, we can see that price oscillator today. It didn't need that much in the way of net advancing issues. I don't remember the exact number, 250, 350, something like that. What I can tell you is we're there right now. Now, at 115, it doesn't make a darn bit of difference as to where we're at. Now, it's helpful at least so that you can understand, because the market closes around these levels, the price oscillator is going to be above zero. What does that say? That says the market is not ready to crater just yet. What does that say? That says to me that you could see the New York Stock Exchange get up and try to tag the top of its August 24th level, get all the way up to 10,068. You're at 98.90 as we speak right now. Could it get up higher than that? Yeah. Where's another area to be paying attention to? This little gap down from September 22nd could be the top of that, which is 99.70. Could be the bottom of the bar from September 21st as well, and that's at about 10.026. So we've got some ranges to be looking at. That's assuming that we get a positive close here. If we have less than the number of net advancing issues that we need, again, I don't recall that number, and the price oscillator is back below zero, the New York Stock Exchange will be saying, not so fast. In the case of the NASDAQ Composite, it still has a negative price oscillator. I think it needed around 870, 890, somewhere around there in net advancing issues. So the NASDAQ Composite, which you really want out in the lead out here, you would like to see the New York Stock Exchange, by the way, but you really want to see, quite frankly, you want to see the NASDAQ Composite, the NDX. You want to see those two. What you really want to see in a bullish marketplace, you want to see the Russell 2000 out in front. You don't want to see the Russell's not going to drive the markets higher. But what the Russell is, just picture yourself on a NASCAR, you being whatever your favorite NASCAR driver is, if you have one. Let's see, if I had one, who would it be? I don't know. I'd still go with Mario Andretti out there, but I don't think he ever drove on the NASCAR circuit, just the Formula One. So just picture Formula One. Let's switch over to Formula One racing, right? And coming into the last lap out there, do you want to be the guy out front, or do you want to be the guy that's drafting? You want to be the guy that's drafting because they're the one that are going to win the race. So you like to see out in front the Russell 2000. Drafting, you like to see Mr. and Mrs. NASDAQ Composite, pushing that Russell 2000. That's really not what we have in place here right now. So with regard to the NASDAQ Composite, price oscillator still below zero out there. We don't have a full bullish formation set up. How do you like that? I mentioned the word Mario. And after the first break, we're going to go out to California, to a race car driver, I believe. I think he's mostly a runner, though. But if we take a look at the Dow price oscillator has been above zero for the last several days out here. It suggests then that what the Dow is striving for is to get up to about the 16,459 level out there. And in the case of the S&P 500, and this becomes the bullish setup for the beginning of the week out here, is if the VIX index can close today below the number of 2087, not to get exact or anything. We are trading at 2173. Let me do this here. Let me pull this so I can take a look at it. The number now 2158 happens to be the 50-day exponential moving average. Closing below that would be bullish bias. Closing below 2087, and that says that the VIX would actually head down to about the 14 level, 1396 as we speak right now, but that number will adjust as the markets continue trading. So a key number to be watching inside of the VIX index, in Stevie's opinion, is going to be $20.87. I will give you another number. Oh, I don't have it written down here. I'll have to give you I'll give you the bearish side. I'll have to do the bearish side. Just remind me, I'll do the bearish side maybe as we come back from this breakout here, because you and I, we always like to look at both sides of the trade. So we'll continue paying attention to that 10-minute chart. I've got that on another screen. If there's some pattern that sets up there, I'll certainly let you know. Love being here with you. Hope you feel the same way. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go out to Southern California to our man Garo. Garo, thanks for calling. Thanks for holding. How are you doing today?
Very good. And you, Steve?
Thank you. I'm doing very, very well. Glad to hear from you. You are taking a look at Tesla. Folks, the ticker symbol is TSLA. Tell us what you're doing and how we can be of assistance.
I need your opinion regarding shorting this stock, Tesla, not here. Whenever the candle comes and goes below that 200-day exponential, which is $231, I want to short it from there all the way down to $220, which was the low of September the 25th. Only that part, and then get out. What is your idea?
So, for some reason, our 200-day exponential moving averages are seem to be a little bit different. I don't know why. I have mine at 244.01 as we speak right now, but quite frankly, even on another system I'm looking at, it's at 242. So let's not quibble so much about a couple of.
I'm sorry, it is simple moving average. I'm sorry. It is already on 200 on exponential right now. The simple, I'm sorry, yes.
No, that's okay. That's okay. No problem. So, all right, so we got that cleared up now. Okay, so you're looking for, now the simple on mine shows at about 231. You don't want to short it till it breaks below that level. Is that what you're saying?
Yes, from there all the way down to 220, which was the lower of the candle on September the 25th.
Sure, sure. Okay. Well, here's a couple of additional pieces of information for you to consider as we take a look at it. In fact, let me just clean up the chart just a tad here, make it a little bit easier for you and for everyone else. Let me turn it off because I know you like that parabolic star. Let's go ahead and turn that off for the moment. So today's candle, just as even though it's off of the lows, it's referred to as a piercing candle. But what it's running into, so it doesn't mean it's bullish, but it's close to a bullish reversal signal out there. But what it's running into that I would be watching for is the bottom of the green line, horizontal line, which happens to be its weekly market profile. And that number is 245.48. And as long as it stays below that level, that if you can time it with the market as well, so if the market reverses for any reason, that's actually one potential area to short from. Another area to short from, and actually what we've seen Tesla do today is test the bottom of both its daily and its weekly market profile. So at this stage here, that should have acted as support. It has not acted as support for the last 2 days. And what it's done is come back and it's tested that level. The old support oftentimes can become new resistance. So you want to watch because the daily number is 246.81 and the weekly is 245.48 and the high today is 246.68. So it's tested those levels, and thus far it's rejected. If it closes above that 245 area, then in the case of Tesla, there's no reason for it to not try to run to the 257 area. Now, let's say that it doesn't do that. Monday starts selling off. This afternoon it starts selling off. If you're going to start shorting when it gets below 231.49 or so, that's the 200-day simple moving average, it's also going to be moving into the August 24th swing point. That's got 9.5 million shares. And that's that volume bar that it would be testing. And what you want to be careful of is in the case of Tesla, if it gets down to 231.40, which is really right where that 200-day simple moving average is, and rejects that on light volume, it will be telling you that it's not ready to get down there and crack that level. You absolutely need to see this close inside that candle, volume or not, if you're going to start shorting it from the 200-day simple moving average, because that's and that's got 9.5 million shares. So that was a big day. It'll take a big market scare for all that kind of selling to come back in to the market inside of Tesla. But if you can catch it, it should find support down at the bottom of that session at about 195. What was the level that you were going to short it down to?
220.
220. Okay. Yeah. So, with the low being down there at the 195 area, if this thing really does run to the downside, that's where it would be the ultimate in test. But in this case here, I think you just have to be somewhat careful of where it is you're looking to short it from, because it's got to get down there with volume. And that's what I see. I think the better short setup to begin shorting it is probably from around risk reward is probably from around the 257 range. But I don't think that meets with what it is that you're looking for. Does that help you?
Yeah, yours is exactly reverse of my idea. You see, I don't go from the very top, from 257.
I tell you, hold on through this break, if you would. We'll come back and take a look at it. We're going to go back out to Garo. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 69, S&P's up 9, Composites up 30. We're going back out to California, speaking with Garo, and Garo's taking a look at trying to short Tesla. TSLA is the ticker symbol. So we're just discussing trading options and plans. So, Garo, before we, after we went to break, I did one other thing for you, and that was I went back, because of that big downdraft that we had on August 24th, I just simply went down to a 30-minute chart just to investigate that candle itself, to also give you another target area for when and if you get into this trade. And that price point would be 220.37. And on a 30-minute basis, when we take a look at all the exhaustive selling that took place, during that 30 minutes, that's where on that bar, that's where Tesla's got what I would say would be the largest support area where it could also bounce from. So that's 220.37. And if it starts selling off, you can use as a benchmark 1.8 million shares out there. And that's something else that I would take a look at. So in your case, you're taking a look at shorting it from when it gets below the 200-day simple moving average, which is okay. I just want to be able to give you some areas of where the warriors might be hanging out.
Yes, I agree with you. But if you check the weekly chart,
okay,
if you check the weekly chart, you'll see that on a weekly chart, what I'm talking about, that $231, it is below the 50-day simple moving average.
Yes.
On a weekly chart. On a daily chart, it shows the simple moving average, 200-day simple moving average. So there are two confirmations for me there. On a daily chart is 231. On a weekly chart is a 50-day simple moving, and both of them are 231.
Yes.
So what I'm assuming that if that 231 breaks, regarding with volume or without volume, which I don't believe in volume at all, it's going to slide. That is my logic.
And there's nothing wrong with that logic at all, and it's okay that you don't utilize volume as one of the triggers for entering or exit trades. I would just put it on a pad of paper and watch what happens as price gets down through that area. Ideally, if it breaks below that and you start to see some selling pressure, you'd sure like to see it attack that 220 level with more than whatever that was, 1.8 million shares, I believe, or something along those lines out there. That would then what that would then help you with is getting down to your lower targets in the 220 to 195-ish type area out there as well. So those are my thoughts as I take a look at it. But what else can we discuss on Tesla? What other anything else?
No, we have to wait and see. We have to wait and see that is that going to slide at $230, or is going to stick to the volume or whatever. So
Yeah.
Because I haven't shorted. Yeah.
Right.
I haven't shorted yet at 257. I will never short it, because once the 257 goes higher, on a weekly chart, on a daily chart, let me bring that to 257. If it breaks there, then it's going to go up all the way to 267 without any hesitation.
I agree. That's another. I agree. Another shorting spot would certainly be as it gets back towards that swing point that it has. And although you don't utilize volume as one of your tools, if this were to test the 270, 254 level and do it with less than 4.9 million shares, and then close back underneath, I'll say 270, that would be where you could also take a look at shorting it from. But that's just using a different set of criteria to do that.
Very well. I'm going to keep an eye on it, and then if something happens, and let's see which way it's going to go, then I will call you in the next week or whenever it hits that number or not. Then we'll go from there. Is that okay?
Perfect. That sounds great. Sir. And you're welcome to call anytime, no matter what Tesla does. All right, my friend?
Thank you, sir. Thank you so much. Thank you.
Thank you. That was Garo in California. And that was, again, a couple different trading strategies, but just simply utilizing all of the different tools that are at our disposal out here. And that's really what we like to do. Okay, so we haven't talked about Goldilocks. We've got to take a look at gold and see what gold is doing. As we take a look at it, just depending on, well, let's do this. Let's go take a look at this chart here. We can see that today is that clothespin that if we were making some nice bread or something, that's what the candle looks like. And what the candle has done today is it has tested the bottom of its rising trend line. That's the green line on my chart out here. It has tested the long-term descending trend out there, still within inside that little wedgie that it has out here. So it has not rebroken or broken back out again above the trend line as it did back here on September 24th. This may be where gold just simply contains itself and continues to just ping pong around with inside this cone. Now, when and if gold does break out of this pattern out here, what it offers us is the promise of a break of this type of pattern. I would say I'm going to use the more conservative break, and that is really this little blue box that I put in here. And that says to the upside then, if gold were to break above the cone, you're looking at about 1220, 1218, somewhere in that area. Likewise, if it breaks to the bottom, which it could do, then you're looking at about a price of about 10.25 out here. So no breakout with regard to its structure today. Nice candle session today, but really all that it's doing, all that it has done thus far, is just simply recoup most of the losses since that full moon that came in, that super full moon that came in on Sunday evening out there. If we go take a look at, gold priced in euros, we can see both in euros, it still is above its descending trend line. In other words, it still has broken out. It still is a breakout when we take a look at it. And you'll see, because I've got different contracts. One that we were just looking at, I believe, was the continuous contract. So the continuous contract is going to line up a little bit different than this one here, where I've got all the futures contracts stitched together a little bit differently, as well as it's going to be a little bit different from if I take a look at the actual current contract out here. If we take a look at the current contract, depending on how we draw these lines, we can see that the price of gold hasn't even hit the top of that descending trend line out here. So positives, if we go take a look at the GLD, let's go take a look at volume, get a volume scenario out here. You've got volume of 5.8 million shares. The swing point from September 24th was 11 million shares. So we do not have the same type of energy associated with today's break that we did, or today's movement, I should say, with the type of movement that we had back on September 24th. Hasn't tested it, but in the ETF structure, probably is. Well, I don't know. Is it tested it here in the actual contract? Yeah, you're trading into it as we speak right now. Now, when you trade into it, even though you're coming in with lighter volume, if you close inside that swing point, it says you ought to go test the top. So gold should be able to make its way up to 1156. Let's check in on a few of the mining equities out here, because they have been behaving very well as of late. If we take a look at Randgold Resources, GOLD, 892,000 shares, up above resistance at this moment. That was of 1:42 p.m. Really important for Randgold Resources, probably a pretty decent message to you and I as to what the mining equities want to do if it can close above the 61.61 level. But really, its real message would come to you and I if it can close above its weekly market profile, and that's at 62.82. So you're at 62.24. It needs just a little more oomph. It needs some more buyers out there. Volume, by the way, 893,000 shares. That is going into the downdraft of 1.1 million shares. So volume not too bad. I don't have the end of day figured out, but that's not too shabby. If we take a look at Agnico Eagle has completed a 1-to-1 A to B equals CD pattern. That's coming off of the lows here from September 11th. That low was 21.22. It makes a straight line move up into 25.49 on September 18th. Makes about a 0.618 retracement on September 22nd. The one-to-one price projection, 27.02. Volume behind today's move is 3.4 million shares so far. Now, that 3.4 million shares is going against the September 25th level of 4.5. So that's, let me just do this here. Let me pull up my little calculator. Let me see what we're actually doing volume-wise. I would need to do this anyway, so before I send out an update to my clients out here, so I might as well do it with you live on the air. So it's about 3.5 million shares. We are a little over 4 hours into, 4.25 into it. So it should do about 5 million shares, a little over 5 million shares, 5.3 going against 4.5. So that's not too bad out there. So it looks to me like, well, and this could be a significant bottom for the mining equities out here. So what we did earlier in the day, we had as one of our exits somewhere around this $27 area, the 1-to-1 A to B equals CD. So as gold started taking off this morning, I went ahead and sent out an update and said, you know what, let's go ahead and raise our stop, which we did, and let's also raise our exit. And the exit on this was at the $28.18-ish level. I the 1-to-1.272. I moved it down a little bit below that area. Now, we can see that if I turn off a couple of things out here, maybe you'll be able to see the screen a little bit easier. It's worth, for me, it's at least worth taking a look at what's going on inside the stock. then I can get some of my work done ahead of time. So let's turn off the market profiles. We're above that. That's a real positive out there. Let me turn off the moving average out here. We got that off. Okay, and I don't even need that horizontal line down there at the bottom any longer. That was a weekly test that was really our signal to go ahead and get into that trade to begin with. Now, if we take a look at Agnico Eagle, I'm trying to just go back further because there's really another trend line that it's likely dealing with. I just got to go back far enough. There we go. Okay, so when we take a look at Agnico Eagle, what I'm doing is coming off of the 2010 level. So since December of 2010, we can see a nice little trend line to the downside. It has not taken that out by any stretch of the imagination, but I believe that that's really the next target area for it, which is in that 29 area. And if it can break through that, that'll be a significant positive inside of Agnico Eagle. But it has made that one-to-one A to B equals CD to the upside. Let's take a look at Gold Corp out here. GG is the ticker symbol. This thing has not been behaving very well. So let's see what we've got in its case. 8.3 million shares today. That's going against 11.7. So it sounds like, let me just see here. So we got 8.3. What's it going to do for the day? About 12 million shares. So that's actually not doing too bad compared to that downdraft day on September 28th out here. Of course, the mining equities will get a lot of energy if, in fact, gold can go ahead and take out that trend line out there, that channel line. In the case of silver, up 70 cents right now. I don't have much in the way of work done in the case of silver out here, but we can draw a couple of trend lines out here. Let's take a look at this trend line inside of silver. We'll use a red arrow coming off of the May 18th, 2015 high. We'll use that as our touch point, and it doesn't really matter. Well, we can use this if we want. We'll just simply use the most recent high, which was out here on September 18th. And so you can see that it has squeaked its head just above that level. Let's take a look at, see what the SLV is doing. I imagine, well, I'm not going to imagine anything. We're going to go find out what it's doing out here. Today, inside the SLV, you've got volume of 9.2 million shares. Going into the September 18th, that has 4.8. Hey, silver has got some juice. Now, if in fact silver can clear the high of 1462, this is the SLV, you'll have a nice A to B equals CD to the upside, assuming that it can do it with volume. I don't know if today is going to be that day. Today is the day you'd like to see that take place. And that would give you a move up into about the 1508, 1543 area, and that's if you are trading the ETF SLV. If we go take a look at what the struggles are inside the market as we speak right now, looks like the struggles are coming from within inside the financial sector, the XLF. The XLF is trading down 22 cents with 46 million shares. Let's see if we get some type of feel as to what it is doing out here. You know, with that huge, wide-ranging bar from August 24th, it just really yucks up the charts out here. That's why, like in the case of Tesla, I said, hey, let me go down and take a look at the 30-minute chart and get a feel for where there's some volume. That way, at least there's a benchmark as Garo, if he gets into that short trade, just to monitor and pay attention to. In the case of the XLF, right now, you know, what has it done? It's tested the swing point from a few days ago, September 29th. That had 39 million shares. You're at 46 million shares right now. You know, is this telling us anything? Not really. We probably have to. But, of course, if I take a look at J.P. Morgan, I'm probably looking at really the same thing, am I not? So, you know, what's the best in this case here, what I would fall back to is let's just go see what's going on with regard to market profiles out here. And in the case of J.P. Morgan, much like what we just looked at with Tesla, you can see that it's still rejecting its weekly market profile low, which is 60.34. So to have any real promise for higher price, that's where it's got to close above, whether it be today or Monday or some other day in the future. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We got an email here from Crazy Carl, I believe, and we're going to take a look at. Carl asked us if we could go ahead and take a look at J.C. Penney having a heck of a nice day today. I don't know what the news is behind it, but let's take a look at J.C. Penney. Right now, trading out at $9.86. Volume behind today's move is 13.7 million shares out here. Now, as we take a look at J.C. Penney, had a key reversal or outside day on the trading session of September 9th out there. And that set up a level of resistance. If it can get above that area, I believe that Carl's taking a look at this to the long side. Carl, if this can close above 10.04, Now, if it can close above 1004 and do with more than 16 million shares, that in essence could be an A to B equals CD to the upside. But even if we draw that pattern in here, so let's go ahead and do that. And I apologize, I didn't get a chance to really thoroughly read his email because we were coming back on the air here. But if in fact it could clear that, this would say that this would give you a confirmed A to B equals CD up to about 1178. Now, what it also has in that range of 1178, almost to be exact, at 1191, as well as at the price point of 1122, is a huge gap down from the trading day of September 25th out there. So that's what you want to be watching for if you are inside this equity. What we can also state is that JCPenney has not been able to get above 1122. And if you take a look at the JCPenney stock out here, you can see that a substantial number of shareholders are holding this equity at much higher prices. So what this is telling us is that that overhead selling area where people that are holding it were just simply glad to get back to the $11 area, but that could also be another area of significant resistance in here. Closing that window, closing that gap down of 1191 would really be a nice type of signal because then that old level of resistance ought to become a new level of support. So, Carl, I hope that helps you. In the case of J.C. Penney, a nice day. I wonder what the news is about it. Let's see here. What did they announce? Something for retirees. I don't know if that's what's pushing the stock with regard to their pension plans. Well, let me set the case here for today, what you should be watching for. Well, first, let's go back and take a look at the 10-minute chart. We talked about how the 10-minute chart at the top earlier this morning really set the fish hook for the move down. We saw prices moving higher with less relative weakness. This was before the jobs numbers were released. Then we saw Niagara Falls take place. This was the main fall out here. And then we saw price move lower with less relative weakness. Bulls came in. They gave you the signals, market profiles, everything that we needed, and now price has gone up into about the 1919 area where it is trading right now. There is no price relative strength divergent pattern as we take a look at it. One could form, though, because we did take a look at that RSI getting above that 70 level. If we see higher price take place over the course of the next hour or so and do it without the vigor behind it to get that relative strength indicator up above the high that it had formed there, and we see a bearish reversal signal, folks, anything can happen. You've seen it happen in front of you. There's been no hocus pocus. It's just really about using magic tools like this to help you understand where the yo-yo of the market to the upside to the downside is going to be. If we see a close today inside of the S&P 500, and it'll take a lot of energy to do it, but below 1909.48, 1909.48, that's the number. You're trading right now at 1930.75, so you can see exactly the type of fall from grace it would need. Back up the truck because the market's going to go down for several weeks. And if it doesn't close below that level, you don't have a sell signal. It's as simple as that. Folks, have a fantastic Friday, fantastic weekend. Look forward to seeing you on magical and marvelous and magnificent Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.